Guys, the question is, can you trust this bounce? The crypto market has been crashing all last week. It's been bloody, and today we finally caught a bid. The market has been shaking. Billions in longs got erased in just days. ETFs have been bleeding red, and the fear and greed index is collapsing to levels we usually only see in a crisis. Every headline screams cycle top, traders are panicking, retail has vanished, and for the first time in months, it feels like the air has been sucked out of the room. But guys, here's the thing. Markets don't move this violently unless something bigger is building under the surface. What if this collapse isn't the end, but the reset that lights the fuse? So guys, stay with me, because what's happening right now is far more important than the fear in the headlines. So first, let's start with the reset that nobody was really looking for. Bitcoin was racing, the Fed had finally cut rates, price shot toward $118,000, leverage piled up, traders pressed long, and it felt like momentum was back. Then the trap snapped shut, and in just days, two liquidation cascades slammed the market, wiping $2.7 billion of leverage off the board and dragging Bitcoin down to $109,000. At the same time, ETF momentum cracked. Spot Bitcoin ETFs lost $903 million last week, and Ethereum ETFs shed another almost $800 million. Every single fund saw redemptions. Fear surged, and the fear and greed index collapsed to 28. That's deep fear, guys. The kind of reading you only get in crisis moments like COVID crash or in the China mining ban. Retail never showed up to the party either. Coinbase's app is still buried in the high 200s. Crypto YouTube traffic, like you guys watching this one, is still stuck at bear market lows. The crowd has walked away, guys. They've given up. This is completely pure apathy. And this is what a reset actually feels like. Heavy, hollow, dangerous. But also it's necessary, because these are the moments that strip out the weak hands and hand coins to those ready to hold the line. Now, let me show you guys something here. This is something that I show you guys often, and it could not be actually any more clear. So again, guys, this is Velo. This is the TradFi section, and this is the CME annualized basis. You can see if we look over here and we look at Bitcoin flows, when they started coming out heavily, around the 19th or 20th September. Well, what do we see over here? Well, we see around the 19th or 20th September when the premium started going down to no longer profitable. This is directly correlated to what you see over here with Bitcoin flows. Same thing with Ethereum as well. Ethereum flows started coming out right around here on the 19th. Basically, most were out, right? BlackRock had a little bit coming in, but mostly then. And you also see that with Ethereum, this premium also pulling back as well. See over here, September 19th, very profitable trade and coming back down. And now we're seeing massive outflows from these hedge funds. Again, not a fundamental break, but hedge funds taking risk off the table. So with that being said, guys, this tells me that this is not a fundamental shift where something major broke. Seasonality is still on the table. September historically has been a horrible month for the crypto markets, and we're just a couple days away from the great October. We'll talk about that in just a little bit. Okay, now let's talk about the levels, because right now all eyes are on one number. That's $105,000. It's where the 200-day simple moving average, a major high volume node, and clean lows, they all line up. You got Crypto Klotz, who points out that the 50-week moving average is still intact, and bull markets don't break unless we close below that. The average is now rising toward $98,000 to $104,000, setting a band of confluence. The RSI also shows that there's room to run. Cycle tops historically hit RSI extremes, and we haven't seen that yet, not even close. On Ethereum, Wacy flagged that the daily RSI is the most oversold since April. The last two times ETH hit this level, it ripped almost 100% and 87% respectively. And then there's seasonality, which we just talked about. October has earned the name Uptober for a reason. Across Bitcoin's history, it's been the single strongest month with average returns over 20%. And as you guys can see from this chart, so far this cycle, Q4 is when the party actually gets started. The past two Q4s rally started in October. In 2023, Bitcoin went up 169% and 79% in 2024. So guys, I'm not sure if you can feel it. I'm sure you actually can feel it. I can feel it. The markets feel incredibly boring. There's just apathy across the board. But this is always the way that markets work. It's never all great when everything's great. That's usually when you need to be careful. When it's like this, when there's apathy, when people are bored, when it feels like nothing's going to happen, is when you really need to start paying attention. Because October has always really carried its weight in crypto. But this year, the calendar year, feels loaded more like never before. You've got multiple final ETF deadlines that are stacked to come in the next 2 weeks. You got Solana, XRP, Litecoin, and even Dogecoin. Bloomberg ETF specialist James Safart, friend of the channel, says that Solana ETFs could begin trading on US exchanges within days, opening one of the strongest altcoin narratives of the year. The final deadline for decision on Solana spot ETFs is only 12 days away, with the SEC set to rule on October 10th. And what do we think about Solana ETFs? Well, if you saw the interview with James Safart, then you will know that we think that, well, they're probably not going to have the same kind of response, but maybe, who knows, right? Because it's hard to anticipate what's going on. And it does feel like there's quite a bit of attention for Solana in the institutional realm. We'll really see what happens when these ETFs actually get approved. And in my opinion, I think that they will. And we also don't need as much flows as Ethereum to move the price as dramatically, because the market cap of Solana is 4 times smaller than Ethereum still. So 4 times less input should give you a similar type of price response. And then guys, we have finally Vanguard, the $10 trillion asset manager who has always been conservative, who we speculated that might come into the space eventually. Well, finally, they're starting to prepare to open their brokerage to crypto ETF access to their millions and millions and millions of customers. Now, they're not going to offer ETFs directly like BlackRock and Fidelity do, but they are going to allow, finally, because of popular demand, which I'm surprised it took this long actually, because their customers want it, right? And their millions and millions of customers want exposure. So this should give some more increased flows through a $10 trillion asset manager, the second largest in the world, who's finally acknowledging and allowing their customers to participate in the Bitcoin and crypto ETFs. So guys, institutions, the doors are opening every day. This is huge. Vanguard, this is big news. But also the regulators are sharpening their knives as well. The SEC and FINRA are probing more than 200 digital asset treasury companies for suspicious trading activity. Could have seen this coming a mile away. According to the Wall Street Journal, investigators flagged unusual spikes in stock volumes and price moves right before these companies publicly announced crypto buys, the kind of pattern that raises questions about insider trading. Some executives have already been warned about potential violations of Reg FD, a rule that demands market-moving information be shared with everyone at the same time, not leaked out to select few insiders that can trade on the news ahead of everyone else. And at the same time, guys, the DAT hype has started to fizzle out. And the DATs are starting to look a little bit like exit ramps for the big players. Solana surged into the Ford DAT announcement, only to collapse after the treasury got deployed. Ford Industries, one of the largest Solana DATs, actually the largest one, is already down, get this guys, more than $245 million on its position. They bought 6.8 million SOL at $232, worth $1.34 billion at the time. Now it's underwater. So AVAX, the token, started ripping as well when the DAT was announced, and that has all been but retraced. Also, World Liberty more than doubled on its treasury news and then dropped 40%. So while DATs were billed as a bridge between corporate balance sheets and crypto, the timing and execution have left many wondering whether they soaked up the liquidity instead of creating sustainable flows. All right, guys, and today we're going to talk about another story that's been dominating the headlines. It's, of course, stablecoins. But we have something called Plasma, which their mainnet just launched, and it opened like a fire hydrant. In the first 48 hours, more than $7 billion in stablecoins poured in, making it one of the most aggressive Layer 1 debuts in the cycle. Over 100 integrations were live on day one. Aave, Athena, Binance Earn, Maple, Euler, they all switched on from the start, and Aave's Plasma market became one of the largest overnight, with deposits surging by the billions in a single day. Plasma quickly climbed the TVL rankings, surpassing Base and Arbitrum to the number 6 spot. Yet, the token XPL sits at the 64th largest token by market cap. And that has to leave you wondering if it could be undervalued here. Let's dig in a little bit more. And I'll tell you guys how I'm positioned on it as well in just a second. But here's the XPL bull case in plain language. You got zero fee USDT transfers that could completely change user behavior on a scale we've never seen before. Just think about what this means for underdeveloped economies where every cent matters. Plasma's custom Plasma BFT, which is their consensus mechanism, aims for 10,000 transactions per second with instant finality. And the chain anchors to Bitcoin while keeping Ethereum virtual machine compatibility for people who are building on it. The model feels familiar to anyone who's ever used Tron before for stablecoins because of the very quick finality and basically zero fees. And with $15 trillion in annual stablecoin settlement happening right now, surpassing Visa, timing matters for stablecoin first platforms. And Plasma's timing is perfect given the stablecoin policy advancements in the US from the Genius Act. And of course, they're following the Genius Act to make sure that they are fully compliant. Advocates point to emerging markets where on and off ramps win the game. Fees on existing rails often land in the $70 to $1.50 per transfer range, which really punishes people who don't make a lot of money, low income users. A zero fee design that secures cheap fiat to USD movement region by region becomes a wedge for mass adoption. Alignment with Tether adds fuel. Plasma captured 7 billion TVL in just 48 hours because Tether needs near zero fee USD transfers to compete with Visa. Tether CEO Palau made 2 direct investments in Plasma. When Tether chooses infrastructure, it solves a scaling problem for its own product, and the market follows that signal. Now, Loopify's longer thesis frames Plasma as the closest exposure to Tether's growth. Add the consumer layer through their fintech competitor, Neobank, which promises a 10% base yield, 4% cashback, and a Revolut-style experience. And the target becomes everyday users who want to send, save, and earn in dollars. Now let's talk about the bear case for Plasma. Well, the bear case for me, guys, is really just the fact that there's no fees. So where does revenue come from? Why does the token have value? This kind of thing. Let me know in the comments below if you have some more clarity on this. But for me, if you're not charging fees, then what's the point of the token in the first place? But as we know in this industry, you don't always need true real-world utility for the token to skyrocket. And that's what you've been seeing with Plasma since it launched. But there was a lot of hype. And for me personally, I'm not buying this right now until I see some more fundamental adoption, because for me right now, it just seems like it's running on a speculative thesis. So guys, now on the stablecoin news and also Tether is raising like $15 to $20 billion at a $500 billion valuation. That puts them in the same league as like SpaceX and OpenAI. And the purpose of this raise is quite telling. They're not just building stablecoin rails. They want to expand into AI infrastructure, energy, telecommunications, and even neurotech. When a company that already earns billions in profit each quarter makes AI and robotics a strategic priority, that's a signal of where smart money is going. And you guys even heard it from Mike Novogratz the other day too. He's putting billions into AI infrastructure as well. The challenge is that most regular investors can't touch the space directly. AI infrastructure, robotics equity, and next generation machine networks are still private, locked up by VCs and institutions, which is why XMAQUINA, the channel partner for today, which you guys know from the channel already, is building something that really matters. XMAQUINA is the first DAO designed to pool capital for physical AI and humanoid robotics. Through the Deuce token, the community already owns equity in leaders like Figure AI, Apptronic, and Agility Robotics, with the Apptronic allocation already up more than 100%. And this is happening at a moment when humanoid adoption is expected to scale faster than smartphones, from just 1,000 units in 2025 to over 1 million by 2030. The DAO's strategy stretches across the entire machine stack: chips, robotics operating systems, sensors, batteries, data capture, and real-world machine assets like autonomous farms and fleets. Through governance, Deuce holders direct how capital is deployed, choosing between equity stakes, on-chain machine revenue, and emerging DeFi protocols. Now, here's where the interesting thing comes in, guys. Genesis Auction 3 is coming up today, right? And it's the final chance to secure your allocation before the token generation event. The first 2 auctions sold out within hours, raising $2.5 million from over 1,450 contributors, with allocations already deployed into real-world leading robotics equity companies like the ones we talked about before. So because on one end, you got Tether, a $500 billion giant making AI and robotics a top priority. On the other, you have a chance as retail with XMAQUINA to get into a decentralized community, giving investors liquid index into that exact same frontier. Both point toward the same conclusion. The next great capital wave is machines and robotics. And guys, another huge announcement. I got something special coming. You guys know Commonwealth over here, rebranding to Wealth. They're launching a SpaceX deal starting on October 1st. This is an opportunity for you to get into SpaceX at a $470 billion valuation, and you can get in as little as $20. So guys, just go check out WLTH.xyz. This is the first offering under the new branding. It's really maturing as a product, as a company, as an application. WLTH.xyz. It's a SpaceX. Oh, and another huge thing too is, remember that energy, that nuclear deal that we invested into a couple months ago? Yeah, they just announced they're going public for $1.2 billion. And that investment was at a $77 million valuation. That's about a 15x in just a couple months from Commonwealth, guys. Huge opportunity. Very proud of what the team is doing over there. Go check them out. So because every cycle delivers a moment like this, a leverage flush, ETFs red, sentiment crushed, it feels heavy. But that weight is the reset. Behind the fear, capital is moving. Stablecoins flooding new rails, institutions preparing ETF inflows, and robotics crossing into crypto through DAOs. This is a setup, a convergence of Bitcoin at a historic support. Wall Street is opening its floodgates, and the entire industries are building on chain. So let me know in the comments below, guys, what you think. Is this correction over? Are we headed into Uptober? Are we going to have a killer Q4? My gut feeling tells me absolutely. We've been through this long, drawn out, slow bull market. And something deep inside me tells me that we are this close to the parabolic bull run that we've all been hoping for. All right, guys, that's gonna wrap it up today. Until next time, stay sharp, stack your Satoshis, and I'll catch you on the next one. See ya.